Good morning, all of you. So we will continue with our earlier discussion on inventory. So we will again summarize that point of non-historical cost method because it is one of the important point which will tell you what exactly how dynamically this selling price is taken to find the value of the inventory. So although I discussed the previously because but still I need to bit summarize so that it will be easy for us when we talk about inventory taking or recording the inventory. Now, how this, what is happening here? Why this non-historical cost method, what they're particularly doing is, what is happening is you have retail organizations, particularly retails, they, always the sales price and you have a gross margin as per the company discussion or per the policy, believe that you will sell the goods at this much of the amount of a gross margin. So what happens, this is sales and to the sales, they add the closing inventory, which is generally they know it at selling price because they sell at a particular value. So they know the selling price. So sales and the closing inventory, they add it. So when they add it, they get the sales price of the goods which are available for sale. Now, what is happening is this is taking not only the goods which has gone outside to the customer, that one, plus whatever is remaining, the balance. Total is the goods which are available for sale. It is there, but this inventory, you have the selling price with you. But whenever you are valuing, you want to value it at the cost. We have to value inventory at the cost. So at that point of time, you have to value the inventory at cost. You cannot take the sales price of good available for sale and you can take it as the value of the inventory. So for that reason, what you have to do is you have to deduct the gross margin of these goods available for sale. Now, when you deduct the gross margin of the goods available for sale, you get the cost of the goods which are available for sale. So this will help you in finding the closing stocks price at a as a through a non-historical cost method. That is why the adjusted selling price method. Now, whenever we get this cost of goods available for sale, what we do is we have this. What is the basic concept here? Is the closing stock is at selling price, and in that stock there is a gross margin. That's a gross profit which is hidden inside it, which is known as the unrealized gross profit because you have not sold it to the customer. So this closing stock, from there you subtract the gross margin. When you subtract the gross margin, then the stock value decreases and you get the closing stock at the cost price. So you get the closing stock at the cost price. So for that reason, what is the formula you use it? For the cost of closing inventory, you use the closing inventory at the selling price and you subtract the gross margin on this closing inventory. Now, when I subtract the gross margin on the closing inventory, then I get the cost of closing inventory. So this is the way they use the adjusted selling price method to value the goods instead of a historical cost method. Now, if you see here, when there is a gross margin in the closing inventory, how do you find a gross margin? You have margin. Suppose you have a rate of gross margin, you multiply it by closing inventory at the selling price, and you get the gross margin in the closing inventory because you got the gross margin. Now you multiply that and you get the gross margin in the closing inventory once you have the percentage or rate with you. So this gross margin, rate of gross margin is actually nothing but the gross margin of goods which are available for sale divided by the sales price of the goods available for sale, because this gross margin is nothing but the gross profit margin on the sales. I hope up to now it is clear, the concept is. So then we can, it is clear, we can see how this concept can be used here in this illustration 7, where you have to calculate the cost of this non-historical cost of closing inventories using the adjusted selling price method. So what we have done is here the opening inventory is given nil, and you have been given the sales during the year has been there. Then the cost of purchases are there. You have got a closing inventory, but it is at a selling price. Know the closing inventory and selling price. What you have to find is you have to find the cost of this inventory. So what basically is done is now from the sales, which is 2 lakhs, you add the closing inventory 50,000, as I showed you earlier in this flow chart, and you get the selling price of the goods which are available for sale. Now this 2 lakhs plus already that closing inventory is there. So the sales is the 2 lakhs which has gone to the customer. That 2 lakhs, when you add it back to the closing inventory, which is 50,000, you get the selling price of the goods which are available for sale. So 2,50,000 is the selling price of goods which are available for sale. From that, when you subtract the cost of the goods which are available for sale, when selling price minus this cost, you get the gross margin. So as I had shown you in the earlier flow chart, similarly, when you less it, you are getting a gross margin of 50,000 when you deduct the cost of goods available for sale. Now, once you get this gross margin, what we are doing is you have got the gross margin with you, you have got the selling price with you divide it, and that gives you the gross margin percentage. Now, once we get the gross margin percentage, what we can do is we can find the cost of closing inventory by subtracting 50,000, which is the selling price, less the 20% of this 50,000, and this 40,000 gives me the cost of closing inventory. So this is how they are calculating the inventory in the adjusted selling price. So this is again the illustration which I have earlier talked to you. Just I'm quickly revising it for a minute, which is the goods received from supplier, trade discount, and packaging and transportation. All of this are included in the cost of inventory, as I discussed in the earlier theories. Now, what happens? You have got the sales during the year is there. Then you have got the selling price of closing inventories. You have to find the non-historical cost of closing inventories. Now, for that reason, we have to first of all find the gross margin. So you have got the cost, you have got the sales during the year. Now, let us calculate the gross margin. So goods received is given 1575,000 less the trade discount. Now this trade discount, how we got it? It's already we subtracted from 3%, 47,265, and then we have GST. GST you added the GST that 15,2825 into 11%. So this gives me the total goods 69,6341. We add the packing and transportation charges, and we get 17,83,841 as the total cost. Now what we do is we have sales during the year, and we have it is given closing inventory is given, so we get the cost price of the selling price of the goods which are available for sale. Now once we get the selling price of the goods which is available for sale, then what we can do is we can deduct the purchases from there, and we are getting the gross profit. Now once we get the gross profit, now what we will do is, because we have to find this through adjusted selling price method, so we need the gross profit margin. So we get the gross profit margin by dividing this from the sales of 24,500, this 696,659, and we are getting 28.09% is our gross profit margin. Now, once you get it, then you deduct from the selling price of closing inventories this gross profit margin, and you get the which is 20.095%, 28.09% into this 235, which is the selling price of closing inventories, and you are getting the inventory valuation as the non-historical cost method to the adjusted selling price method, that is 168,980. I hope up to here it is clear to all of you. Now we will discuss the concept of inventory taking, which I had discussed in brief in the earlier class, but we will be discussing in detail now. Why this inventory taking is happening is, first of all, we have to understand the basis behind this inventory taking. When the inventory at a particular year is a closing year, so some companies they follow 31st December, some companies they follow 31st March. Whatever is the closing year, normally what happens, you cannot, you have to suspend all the activities during that time and check the inventory. So normally what happens, some time passes by, or you feel that, no, I will check it after this. The company decides that, yes, after this much time, I will check the inventory, what is the actual stock taking. So what happens is, sometimes the close of the year, the stock taking may be coming before, or the stock taking may become after. So date of actual inventory taking may be before or after, because you have to suspend all activities and check it, and so that they will find out what should be the inventory at the close of the year. So now, normally what happens during that time, there are sales and purchases. There are also sales return and purchase return. But when we have to find the inventory, we have to follow the method that from the before the date, whatever you are taking to the close of the year, it is known as the close of the year is called as the closing stock valuation. Suppose you are taking the inventory before, and when you are going to the close of the year, the calculation of inventory for the closing year is you have to go on the closing stock calculation basis. But if you are doing it before date of actual inventory, this is the date, and you have after that date you are taking the date of actual inventory, then you have to take it as an opening stock calculation. So you see, either you have to take as a closing stock calculation or as a opening stock calculation. It depends on the question which has been asked to you. And this question will guide you to tell that whether we should do a closing stock basis calculation or opening stock basis calculation. So I think up to here it is clear. So basically our focus will be all the questions in inventory taking will be on the close of the year we have to find out. So this is the way of record keeping or monitoring inventories. You need to know at the closing of the year what is the inventory, because what happens is like reconciliation, you study bank reconciliation, inventories need to be reconciled and you have to ascertain what should be the value of the inventory at the closing year. Phase one, yes.
Yes, sir.
Yeah, phase one, please.
Sir, please explain me Hindi in again, sir.
ठीक है, मैं थोड़ा संक्षिप्त में बताता हूँ कि
Yes,
जैसे कि इन्वेंट्री जो है वो किस दिन में डिसाइड किया जाता है, क्लोजिंग पीरियड में डिसाइड किया जाता है। कोई भी इन्वेंट्री के लिए क्लोजिंग पीरियड क्या है, इसका क्लोजिंग ईयर जो है एक डेट होता है। 31 दिसंबर कोई कंपनी फॉलो करते हैं, कोई कंपनी 31 मार्च फॉलो करते हैं। तो नॉर्मली ये क्लोजिंग
yes,
ऑफ द ईयर में डिसाइड होता है। तो उस टाइम से पहले आप तो इन्वेंट्री का एक एक्चुअल फिजिकल वेरिफिकेशन कर सकते हैं, या उस टाइम के बाद आप इन्वेंट्री का फिजिकल वेरिफिकेशन कर सकते हैं ना। नॉर्मली उस टाइम में क्या होता है कि सेल्स भी हुआ है, परचेज भी हुआ है, सेल्स रिटर्न भी हुआ है, परचेज रिटर्न्स भी हुआ है। ये सब इस एक महीने 10 महीने में किसी भी टाइम में ये रनिंग कंपनी में रनिंग है, ये चलता है। आपको ये चेक करने के लिए पूरा एक्टिविटी उसी दिन सस्पेंड करके देखना पड़ेगा, वैसे नहीं करते। 2-3 दिन के लिए सस्पेंड करके वो लोग फिजिकल वेरिफिकेशन कर लेते हैं किसी भी दिन में लेके ना। अब क्या है कि अगर आपने पहले से चेकिंग कर लिया है इन्वेंट्री को, और आपको वो पहले का डेटा है और आपके पास कुछ डेटा है, उस पहले के डेटा और क्लोजिंग ईयर के बीच में क्या क्या सेल्स परचेजेस रिटर्न्स हुआ है, तो आप उसको क्लोजिंग स्टॉक कैलकुलेशन मेथड में इवेल्युएट करेंगे। नहीं, अगर आपका क्लोजिंग ईयर है और डेट ऑफ इन्वेंट्री टेकिंग उसके बाद हो गया है, तो उसको पीछे जाना होगा। तो आपको ओपनिंग स्टॉक के बेसिस में कैलकुलेट करना पड़ेगा। अगर आप आगे का तरफ कैलकुलेशन कर रहे हैं तो उसको क्लोजिंग स्टॉक का कैलकुलेशन का फॉर्मूला यूज करना पड़ेगा। आप अगर पीछे की तरफ जा रहे हैं, बैकवर्ड कैलकुलेशन कर रहे हैं, तो आपको ओपनिंग स्टॉक कैलकुलेशन के बेसिस में जाना पड़ेगा। तो मैं एक दो उदाहरण भी दूंगा, और वो उदाहरण के बेसिस में, उदाहरण के देखते ही आपको पर्याप्त ज्ञान आ जाएगा कि उसको कैसे इसको जो दिया गया है, जो कुछ प्रश्न दिया गया उसको कैसे आपको सॉल्व करना है, कैसे उसको उसका ढूंढना। तेजमान जी,
yes,
आपको समझ में आ गया?
yes, sir. Thank you,
ओके,
sir.
ठीक है। ओके, थैंक यू। Now let us see that there is a firm which closes its book on 31st December and carried out the inventory taking on the 7th January next year. And what is the actual inventory? Was of the cost of 7,85,000. So here what happens? The books are closed on 31st December, but the inventory is taking is on the 7th January next year. And actual inventory is of the cost of 7,85,000. During the period January 1 to 7, purchases were 1,53,000 and sales were 2,50,000. The markup being 25% on cost. So what has been there? That books is on 31st December and inventory taking is on 7th January. Now I would like to ask the class that this is the cost is given and there are purchases and sales given. The question is, we have to find the inventory on 31st December. What should be the inventory on 31st December? We have to find. This is the question. I would like to ask the class whether we should go through a closing stock approach or we should go through a opening stock approach. Let me see who answers it. So as I explained you, so how when you yeah, Joy Boy. Yes, Joy. Yeah, Joy, you can speak. I've asked you to unmute. Okay, Joy is not. Anybody else who can speak on this? My question is, what is the basis of our calculation? Okay, Vedant Sharma. Yes, Vedant. Yes, Vedant, please pick up. Yeah, Sumil is also there. Yes, Sumil.
Can you repeat the question, please, sir?
Yes.
Please repeat the question.
My question is, when you are calculating the inventory as on 31st December and you are given the inventory on 7th January, what basis of method of calculation you will use for inventory taking? Whether it is like opening stock basis or closing stock basis. So 31st December will be calculated treated as opening stock, or 31st December will be calculated treated as closing stock. Yes, Tanvi.
Opening stock.
Yeah, Tanvi, good, very good. We need to calculate it as an opening stock basis because 31st December is the books are closed, but we are taking the inventory on 7th January. We have moved ahead. So 7th January is like a closing stock, and going back to 31st December is like you are calculating the on the basis of opening stock basis. So the date is ahead. Then if you are calculating, it should be like an opening stock. If the date is beyond, if the date is before, then it will be like a closing stock. Krish wanted to say something. Okay. So actual inventory was of the cost of 7,85,000, means the inventory on 7 January is of the cost of 7,85,000. Now you have got the inventory on 7 January at cost, and you have been given from January 1 to 7 whatever purchases and sales will happen, and there is a markup of being 25% on cost. So we'll discuss in this markup what is a markup. Now what happens? We have to calculate the inventory on 31st December. That means this inventory on 31st December, we have to calculate it at a cost basis. We have given 7 January at a cost of 7,85,000, but we have to calculate the inventory on 31st December on the cost basis. So the books are closed 31st December every year. Then you have January to 1 to 7, all the sales and purchases. You got the inventory information of 7,85,000 on January, but you don't have the information of inventory on 31st December, which you have to calculate. And what else we have? We have purchases which happened 1,53,000, and we have sales which happened 2,50,000. So this is the only information we have, and on the basis of this, we have to calculate the inventory as on 31st December. So the rest information what we have is there is a markup of 25% on cost. So this is the last final information we have, and on that information, we have to calculate the 31st December inventory. Now what we do is, we understand that we have to calculate the opening stock. Let us understand for opening stock, what are all the things we are taking out, right? When we are calculating on opening stock, what is added by? Closing stock will be added to the opening stock, is already there. Closing stock is already there. With that, what additions and deductions will happen? Purchases will be deducted because purchases are fresh stock additions, okay? But which is indicating recent additions to the stock. But what happens in the opening stock? You have to add for the closing stock, whatever purchases have given, you have to deduct it. So from the closing stock, what you are deducting is purchases, because these are representing the recent transactions which you have to deduct it, because we are going back to the opening stock. Then cost of goods sold to be added back, because these goods were already sold by 7 January, but they might be there in the opening stock on that day of 31st December. So on 7 January, in between, there must have been sales, but before January 1st and 31st December, we must be having those goods. So once we understand this concept, we can calculate all these inventory taking problems if you know whether we have to go as an opening stock or you have to go as a closing stock. Now what happens is, the next point is this markup is being 25% on cost. What is this markup? You have cost is 100. Markup is like a profit. Profit is 25% on cost, profit equal to 25. So what will be the sales price? Sales price is 100 plus 25, 125. So this is an assumption as a basis of when you take it as 100. So you have January 1 to 7 purchases 1,53,000 and sales is 2,50,000. If we see when the sales price if you take is 125, it is equivalent to a 2,50,000 purchase. What we are interested in? We are interested in the cost. So for 100, that is the cost of goods sold. We have to find the price of this cost. So what you do is the 2,50,000 multiply by that 100 divided by 125 because you are interested in the cost, and that will give you the figure for 100. What is the cost for 100 value? So I think up to now it is clear. No doubt in it. So then what we got is you have got the inventory, you deducted the purchases because we are going towards opening stock, and you added the cost of goods sold. So 2,50,000 into 100 by 125 is coming 2 lakhs. So when you added it, then you are getting 8,32,000. This is the when your books are closed, this is the inventory taking as of 31st December, 8,32,000. So that means the inventory on 31st December was more than, that is on January 7, it is 8,32,000. Okay. So with this concept and this formula, which the calculation is done, if anybody has any doubt, because this is one of the questions which is frequently asked in the foundation exam. So if you have any doubt here, tell me, then I can proceed forward. Yeah, Joy.
Yeah, sir. Good morning, sir.
Good morning.
At that time, I was unable to unmute it, sir. But now, sir, I have a problem of there here. This 2,50,000 into 100 by 125.
Mhm.
And
Yes.
this 25 is a markup cost, no, sir.
Mhm.
Markup, that is a profit actually.
Mhm.
And why we are multiplying it with 100, sir?
Yeah, because you have to understand one thing, that when it's a markup means you are
Yeah.
trying to sell your goods at that markup. This is your target, right?
Yeah,
That you
yeah,
should get always a 25%, right? So when there is a target, what it is happening is, as I said here is, if you see clearly, now this cost is 100 means profit. If you imagine cost as 100, now it's a percentage. The markup is 25% on cost. When it's a percentage, means 25 divided by 100, isn't it?
yes, sir.
25% on cost means 25% divided by the cost. 25,
Yes,
if 25 is the, if 100 is the cost, 25 divided by 100, that's the percentage, right?
yes, sir.
So when that is coming, then your selling price becomes 100 plus 25, 125. Because we are talking in terms of percentage, that's why we're
Yes,
taking
sir.
cost as the base figure, 100. Because it is written 25% on cost. So now when you get the sales price, what happens is, because you have got the sales, and where
Yes, sir.
calculation of gross margin was always on the sales basis. Now what happens is, when it is 125, we are getting 2,50,000. What I am to do
Yes,
is,
sir.
I am interested actually in the cost, because inventory has to value that cost. So for cost is
Yes,
100. So for 125, it is 2,50,000. But that means for one, it will be 2,50,000 divided by 125. So for 100, it will be multiplied. So
Yeah.
it is like a unitary method. So for
Yes,
125, it is 2,50,000. For 100, how much it will be?
Oh, okay, sir.
Clear, no?
Yeah, yes, sir, clear. Sir, I have a problem in this gross profit margin also, this percentage.
Gross profit. Yeah. Now I think
Yes,
now it's
gross
clear.
profit margin. Yeah.
Okay. So now when we add it, we are getting the cost of goods sold. When you add it, we are getting total inventory. So now we will go to another calculation. Yeah, two participants raised hands. Yes, Subhash.
Good morning, sir.
Good morning.
सर डाउट ये है कि आप इंग्लिश और हिंदी को मिक्स करके समझाते तो बहुत बहुत अच्छा से समझ में आता सर।
ठीक है। मैं इंग्लिश और हिंदी को मिला के बात करूंगा। ओके। ये जो इलस्ट्रेशन आएगा वो पिछला वाला तो समझ में आ गया ना?
यस सर।
हम्म। तो मैं तो सारा चीज एनिमेटेड दिखा रहा हूँ, ऑलमोस्ट समझ में आ जाएगा। फिर भी जहाँ पे जरूरत पड़ेगा आई विल यूज द बोथ लैंग्वेजेस, इंग्लिश एंड हिंदी। सो आई विल टॉक इन इंग्लिश और उसको फिर हिंदी में दोहराऊंगा। हाँ, सो
सर ऐसा है कि बहुत से स्टूडेंट ऐसा है कि मतलब एवरेज टाइप के है, तो वो लैंग्वेज को थोड़ा कन्वर्ट करने में उतना एक्सपीरियंस
ठीक है,
नहीं
नो
है।
डाउट। मैं क्वेश्चंस भी हिंदी में पूछता रहूंगा और मैं उम्मीद करूंगा कि जो आप लोग हिंदी है ना उसको एटलीस्ट हिंदी में सही आंसर करें। ठीक है, सो दैट मुझे पता चल जाए कि आपको कितना तक वो उसमें आता है या कुछ और जानना है। ठीक है।
ठीक है सर।
ओके, तो मैं अभी ये जो प्रॉब्लम है उसमें क्वेश्चन है भी पूछूंगा एंड आई विल आस्क एंड आई विल नो। ओके।
ओके सर।
सो दिस इज द इन्वेंट्री इज गिवन ऑन 31st मार्च। यहाँ पे इन्वेंट्री दिया गया है एंड you have given the purchases and manufacturing expenses, selling expenses, administrative expenses, financial charges. तो सुभाष, आई वुड लाइक टू आस्क यू, आप बताइए कि इसमें से कौन सा आप इन्वेंट्री का कॉस्ट में लेंगे और कौन सा इन्वेंट्री के कॉस्ट में नहीं लेंगे? So can anybody answer in this inventory which one you will take in the cost of inventory and which all you will not take in the cost of inventory? The same thing I had discussed earlier also. So Pari Sharma, yes. Yeah, Pari Sharma, Somil Arora, yes.
The
यस सर।
purchases,
क्या हुआ? Yes.
purchases,
हाँ, purchases will be taken in the cost of inventory. Anyone more?
manufacturing,
Manufacturing expenses and
the
which will not,
administrative में थोड़ा सा डाउट है।
किसमें?
एडमिनिस्ट्रेटिव एक्सपेंसेस में।
एडमिनिस्ट्रेटिव एक्सपेंसेस को जब तक लिंक नहीं किया गया है प्रोडक्ट के साथ हम लोग उसको वहां पे नहीं लेना है, बिकॉज एडमिनिस्ट्रेशन मतलब एंटायर कंपनी का एडमिनिस्ट्रेटिव है। अगर आपको कोई दिखा गया है एडमिनिस्ट्रेटिव मींस अनलेस इट इज स्पेसिफिकली लिंक टू द प्रोडक्ट वी आर नॉट टेकिंग इट। एडमिनिस्ट्रेटिव एक्सपेंसेस कैन बी द होल एक्सपेंसेस, राइट?
ओके सर।
ओके। और फाइनेंशियल चार्जेस भी वैसा ही है। फाइनेंशियल चार्जेस को कभी लिंक किया जाता है, कभी लिंक नहीं किया जाता है। कुछ भी नहीं दिया गया है तो वी आर नॉट लिंकिंग इट आउट। एंड यू कैन राइट इन ए नोट ऑल्सो ऑन द assumption that it is assumed that administrative and financial expenses and financial charges are not attributable to the product. I said in English, हिंदी में आप लिख सकते हैं इसका प्रोडक्ट के साथ कोई भी संबंध नहीं है, प्रोडक्ट का कैलकुलेशन नहीं, इसका कोई भी कॉस्ट उसमें लिंक नहीं हुआ है, जुड़ जुड़ नहीं गया है, राइट? Okay, so what we see is we have purchases, manufacturing expenses. We cannot. Financial charges. So what happens is now let us understand from the following. You have inventory at 31st April 2021, and you have to calculate the value of inventories on 31st March 2022. Now my question is, how do you proceed? Do you proceed as an opening stock calculation basis or closing stock calculation basis? Now we have to calculate the closing stock or opening stock. इसमें हम लोग क्लोजिंग स्टॉक का कैलकुलेशन करेंगे कि ओपनिंग स्टॉक का कैलकुलेशन करेंगे? हमारे पास इन्वेंट्री का डेट एक पहला का डेट है और अभी बाद का डेट का हमको इन्वेंट्री निकालना है। तो कैन एनीबॉडी से? सुभाष अधिकारी,
यस सर।
सत्यम दुबे, यस। हाँ, सत्यम, सुभाष, सुभाष,
So opening stock.
यस।
So opening.
ओपनिंग तो दिया गया है ना, नहीं दिया गया है? जो दिया गया है उसको हम नहीं कैलकुलेट करेंगे, जो नहीं
Closing
दिया
stock.
गया उसको कैलकुलेट करेंगे। whatever is given we are not calculating that. From that we are going to that which is not given. So which one is not given? Opening stock is not given and closing stock is not given.
ओपनिंग स्टॉक सर।
Closing.
Saida, Tadvi,
क्लोजिंग स्टॉक।
Closing.
Tanvi, what is your answer?
Closing stock.
Yes, good, Tanvi. Closing stock हमको दिया नहीं गया. We have not got the value of the closing stock. We have the value of the opening stock. How do you know? Simply we should see the date. Inventory is given on 1st April 2021. Okay, which might be the inventory of 31st March 2021 came to 1 April 2021, the beginning of the financial year. And you have to calculate the inventory in the next financial year, that is on 31st March 2022. That means you have been given opening, you have to find the closing. Okay, before previous date is given, 1st April 2021 means you have been given the opening and you have to calculate the closing one. Now here what we see is that you have been given purchases, manufacturing expenses, selling, administrative financial charges, out of which you have taken only purchases and manufacturing expenses to be included in the cost of inventory, because it is assumed and known that these are directly linked to the preparation of the product. So when you are taking you have opening stock with you, you add purchases, right? And there must be some write downs also. When you're writing inventory, when the inventory becomes obsolete. Now, when this write down comes and why it is taken out from the inventory is, suppose market conditions have happened something, or some customers want to take it at this price, which price you at least you are willing to sell, because it is a slow moving inventory, it is obsolete inventory. Inventory का जो पर्याप्त जो गुण है वो अगर खत्म हो जाता है, इन्वेंट्री का जो वैल्यू अगर है, जो दाम है वो खत्म हो जाता है मार्केट में, मार्केट डिमांड उस इन्वेंट्री के लिए नहीं है. जैसे आप कोई जमीन खरीदते हैं और वो जमीन का डिमांड नहीं है, तो आप बाद में उस जमीन को कम प्राइस में बेचने के लिए राजी होते हैं, तो इन्वेंट्री को भी आपको यहाँ से हटाना है, क्योंकि वो रह रहे के एक बहुत बड़ा कॉस्ट होता है कंपनी के लिए. सो कभी कभी छोटा छोटा इन्वेंट्री का चीज जो ऑब्सोलेट हो जाते हैं, तो आप उसको एक कम दाम में देते हैं. जब हम लोग उसको कम दाम में देते हैं या कम दाम में वैल्यू करते हैं, तो उसको राइट डाउन करते हैं. सो वी राइट इट डाउन and it goes away from the cost of the total value of these inventories. Manufacturing expenses gets added up. Cost of goods sold is out of this, is goods have been so given to customers, and then only we get to the closing stock. I think this is clear to all of you. ये समझ में आ गया? I think अगर डाउट है तो यहाँ पे पूछेंगे आप. So if we remember this formula, there would be not a problem on this. Okay, will not face any problem. Now, if you can see here, there is another question below that. At the time of valuing the inventory on 31st March 2021, 31st March 2021, a sum of 17,1500 was written off on a particular item, which was originally purchased for 50,000 and was sold during the year for 45,000. Bearing this transaction, gross profit earned during the year was 20% of sales. Now, the profit which is earned by the company during this year is 20% of the sales. But what happened is, 1st April है, 31st March 2022, we have a long journey to that. Inventory था 1,42,500. In that, what happened? An item was purchased for 50,000. But what happened? That item which was purchased for 50,000 was written off for 17,500. It was written off from that item because market demand, as I talked just now that when there is a market conditions don't make it this inventory to have that value, so you write off that. And among the sales of 12,45,000, this 45,000 was that inventory which was sold during that year. Which inventory? This 50,000 inventory, from which there was a write-off, and there were purchases of 7,62,500, and there is a gross profit which is 20% of sales. Now, here, if you have any doubt, you can ask me. Otherwise, proceed. Yeah, Chaitanya, raise hands.
Sir, from where the amount of inventory is taken, 1,42,500?
Yes, it is given in the question. That's why it's taken. Okay. Fine then. So we have to find the inventory on 31st March 2022. So just we can see here, inventory as done, first April is given 142,500. And you have to subtract the book value of the abnormal inventory. As I showed you in that equation, that flow diagram, I did it. From 15,000, you have to deduct 17,500. You get 2,500. And you add the purchases, whatever happens, 7,62,500. Manufacturing expenses, 1,50,000. So you get 10,22,500. This is the total value of the inventories you got. When you write down some inventories, you added the purchases. Now what happens? You have to deduct the cost of goods sold. Now what is this cost of goods sold? Okay. So you have the sales as per books is given 12,45,000. Out of that, one was that abnormal item which has been sold. That is 45,000. Now when you deduct it, then you get the sales of 12 lakhs. From that, you deduct the gross profit at 20%. So you get the gross profit at 20% means it's given gross profit margin means 20% of the sales. That means 2,40,000. So this gives us the cost of this total equation gives us the cost of goods sold, because you have to first of all calculate the cost of goods sold. For that, you have to divide sales to deduct gross profit. But from the sales, you have to deduct the abnormal item, which is already included in the sales. And then you get the 9,60,000 is the cost of goods sold. So from 10,20,000, you deduct 9,60,000. You get inventory, which is on trade as on 31st March 2022, 62,500. If there is any doubt here, you can ask me. I will proceed to the next one. Okay, fine then. So before going to this, we have to understand certain sales which has to be needed, because when these type of questions normally in the foundation exam also they ask, when they come, because that really practical also happens in companies that like that. So when these type of questions come, how to deal with such type of questions, because sometimes questions can be lengthy also, and then you'll be asking you a lot of problems to solve on the intricacies of inventory. कभी-कभी questions बहुत लंबा होता है और आपको बहुत सारा चीज कैलकुलेट करना पड़ता है. इससे पहले अगर आप फॉर्मूला को, कॉन्सेप्ट को अच्छा से जान ले, तो वो कैलकुलेट करके करने में, सॉल्व करने में उसको आपको इजी होगा. सो इफ यू नो दिस कॉन्सेप्ट बिफोर, if you know the equations before, if you know what is the method of solving, so it will be easy for you to, once you lead those points or events, yes, this is linked to this, this is linked to this, and it will be easy for you to solve. Now let us see what is happening here. I am talking of a consignment sales. Consignment sales is a one type of sales. यहाँ पे क्या होता है? There is a consignor is there, and it sells the goods to the sends the goods to the consignee. कंसाइनी को गुड्स देता है. क्यों देता है कंसाइनी को गुड्स? उसका देने का मकसद क्या है? कभी कभी ये क्या होता है, ये खुद कस्टमर के पास नहीं पहुंच पाता है. मे नॉट बी एबल टू रीच द कस्टमर by itself, and it wants to expand the business in a geographical region, so it may take the help of consignee. So agent की तरह एक relationship है, there is like a principal agent relationship. So consignor consignee को goods deliver करता है, consignee वो goods कस्टमर को देता है. जब कस्टमर को वो गुड्स डिलीवर होता है, तब कंसाइनर को पता चलने के बाद वो कंसाइनी को एक commission देता है. So once it is known, the consignor gives a commission to the consignor. So up till then goods arrive, go to that place, तब तक नहीं दिया जाता है. Unless once it reaches the customer, the risks and rewards have been transferred to the buyer, then only the consignor is entitled to commission. So what happens is, yes, Mathur Namdev. Yes, Madhu.
Hello. Good morning, sir. Hello.
Yes, Madhu.
Sir, consignee is just like a middleman.
It's an agent actually. It takes the commission. It doesn't have the responsibility of keeping the goods. That's not as an inventory, because it will give it to the customer finally. Okay. It's just like an agent, and it has to, it treats the consignor like a, credit purchase जैसा, and anything settlement with the consignor is debited. Anything settlement with the consignor books is debited in the books of consignor. It is just like an agent who just gives the good to the customer and gets the commission from that goods. So the risk and rewards of all this ultimately from the consignor transfers to the customer, not the consignor. I hope, Madhu, it is clear.
Yes, sir. Yes, sir. Thank you.
Okay, thank you. So the consignee is not the owner of the goods. He does not purchase the goods, hence he does not include this in his books. Now what happens is this is all about a consignment. So now why I'm telling all this? Now this is the type of problems which will come in the inventory taking. Now coming to a goods on sale or approval basis. Now when there is a goods on a sale or approval basis, what happens? Normally, sometimes you send the goods to the customer. Customer here this is a different type of sale. Customer takes the goods. कस्टमर कहता है वो गुड्स को लेता है लेकिन परखता है उसमें से जितना अगर पूरा चाहे पूरा रखता है पूरा नहीं चाहिए पूरा भेज देता है नहीं तो कुछ रखता है कुछ भेजता है so it is does in parts either it gives some sends something or it totally rejects every goods or it takes. Now what happens is this is the basic, this is where you are telling the prompting the customer that no, you are the customer, you are the king, and yes, customer has the ultimate decision power. Customer will check the quality and specifications. If it is everything is right, customer will take it, otherwise it will not take it. So you are handing over the decision making to the customer here, and this is the way you want to improve your sales, improve your market image. So this way, this is the way of a goods on a sale or approval basis. Now, what happens to the inventory on this goods on sale or approval basis? We also need to know, because this type of question also comes in the inventory taking also. So what happens? जैसे कि कस्टमर अप्रूव कर लेता है, the moment the customer approves the goods, क्या होता है? दो चीज हो सकता है. कस्टमर के पास गुड्स पहुंचता है, कस्टमर अप्रूव कर लेता है. Moment the customer approves it, sale is recognized. Yes, it can be a sale. The customer has approved it. The customer sent it that yes, I will take this much goods, means out of 100, it has taken say 70 goods, means these 70 are the sales. Yes, the sale is recognized. Now what happens is the customer doesn't approve it. Say from the takes 70, 30 returns back. Now what happens? This 30 is nothing but the closing stock at the cost price. So it's treated as a closing stock at the cost price, because whatever is approved only is recognized as sale. Whatever is not approved is not recognized as a sale. So this is the way of guiding goods on the sale or approval basis. Very important in this type of transactions is the time period. Now what happens? Now it's not that I have given the goods to customer. Customer is taking time, is telling you, let me see, and customer is not telling anything. By that time, customer must have used the goods, customer must have benefited from the goods, and I'm not able to know that whether it's a good on a sale or approval basis. On that basis, on that time, what I do, that will be after discussing with the customer user, there is a window period, there is an approval period. After how much time is required for the customer to decide on the product. So that time, कितना टाइम में वो डिसीजन लेगा, कितना टाइम में बाद वो निर्णय लेगा कि ये प्रोडक्ट में देना चाहिए कि नहीं, इससे प्रोडक्ट को मैं यूज करूँ कि नहीं, इससे बेसिस में हम लोग सेल को रिकॉग्नाइज करेंगे. So the approval period you have is it can expire, and what happens is if it is expired, it doesn't say anything. You recognize it deemed to be sales, recognize sales. But if it is unexpired, then customer decision is pending. Then you keep it as a stock with the customer, but it's a cost price. The stock is with the customer, not with you, but it is at the cost price. Basically, sale is not recognized. So this is the point. This flowcharts, kindly remember these concepts, because now the subsequent problems which you'll be solving will be based on these concepts only. Now, this is another interesting thing: sales return and purchase return. What happens? You make a sales, and customer is not satisfied with the product, so there is a customer returns it. So there is a sales return. So when there is a sales return, normally it is sales, it is deducted from the inventory, and there is a purchases. You brought goods, but what happened? They are not satisfied, so there is a purchase return. But for the time being, when you take the inventory, it can be added to the inventory taking. So this is also, this concept will be used in the sale and purchase transactions whenever there are sales return and purchase returns. As I said, whenever we are talking of a opening stock, what we are doing is we are having the closing stock, we are removing the purchase out, because purchase denote the fresh transactions first closing stock. And we talked about goods sold on approval. So whatever goods which are sold on approval, which is known now, at that time in the closing stock it was not known, it is added, and any unsold consignment is, because that consignment is unsold, so it has to be removed from the opening stock, because it will be resembling more towards the closing stock. And cost of goods sold will be added back. So ये फॉर्मूला को आप अच्छा से याद रखिएगा, दिस फॉर्मूला व्हेनेवर यू आर गोइंग फ्रॉम क्लोजिंग स्टॉक टू ओपनिंग स्टॉक, व्हाट आर द थिंग्स विल बी टेकिंग अप। नाउ व्हाई आई एम टेलिंग ऑल दिस, क्योंकि ऐसा वाला प्रॉब्लम्स आपको अभी दिखाई देगा। एक तो गुड्स सोल्ड में अप्रूवल भी होगा, दूसरा अनसोल्ड कंसाइनमेंट के बारे में भी दिखाई देगा। सो दिस पॉइंट वी हैव टू रिमेंबर ऑन दैट बेसिस। So all these evaluations we are doing on the cost basis. Normally the evaluations has to be done not on the sales basis, in the cost basis. So our aim is, हमारा ये चाह रहेगा, हमारा ये ऑब्जेक्टिव रहेगा, हमारा ये सोल पर्पस रहेगा कि उसको कॉस्ट बेसिस पे हम लोग कैलकुलेट करें। वी हैव टू कैलकुलेट ऑन द इन्वेंटरी ऑन द कॉस्ट बेसिस। Here the illustration 9, which is talking of all this, you have a trader who is preparing his accounts on 31st March, and due to some unavoidable reasons, no stock taking could be possible. Yes, Tanvi.
सर अगर क्या नाम है कोई शॉपकीपर है और उसने एक्सपायरी रिटर्न करी है कंपनी को,
क्या हुआ?
रिटेलर है वो, अगर क्या नाम है किसी शॉपकीपर ने रिटर्न किया है, एक्सपायरी रिटर्न किया है कि जैसे कंपनी से आ रही है तो प्रोडक्ट्स, तो उसको रिटर्न किया है, तो वो सेल्स वो वाला जो अप्रूवल पीरियड है उसमें आएगा।
नहीं, मैं आपका क्वेश्चन जरा फिर से बताइए, क्या हुआ है, सुनाई नहीं दे रहा है।
एक 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 शॉपकीपर है, रिटेलर, उसने क्या नाम है कंपनी से प्रोडक्ट्स लिए हैं और उसने क्या नाम है अगर एक्सपायरी रिटर्न करी है पीरियड ऑफ टाइम में, अप्रूवल
आपका
पीरियड
थोड़ा
ऑफ
वॉइस
टाइम में।
ब्रेक हो रहा है। शॉपकीपर ने रिटेलर को प्रोडक्ट्स दिया।
एक शॉपकीपर है, रिटेलर है वो, उसने कंपनी से
शॉपकीपर रिटेलर
प्रोडक्ट्स
है।
लिए। हाँ,
शॉपकीपर
उसने
रिटेलर। हाँ,
उसने
क्या हुआ?
कंपनी से प्रोडक्ट्स लिए हैं, वो एक्सपायर हो गए हैं, तो वो रिटर्न कर रहे हैं, एक्सपायरी रिटर्न कर रहे हैं, तो वो किसमें अप्रूवल ऑफ टाइम में आएगा, पीरियड ऑफ टाइम।
एक्सपायर मतलब आप किस तरह का एक्सपायरी बोल रहे हैं?
जैसे टाइम से निकल गया ना, वो प्रोडक्ट एक्सपायर हो गया है उसके पास।
नहीं, देखिए, हर सेल के पीछे एक डिस्पैच टर्म्स और पेमेंट टर्म्स होता है, ठीक है।
यस सर।
हाँ, अगर आपका डिस्पैच टर्म्स और पेमेंट टर्म्स के हिसाब से नहीं चल रहा है, तो आप, आई थिंक यू ऑल हैव बिजनेस लॉज आल्सो। बिजनेस लॉ आपका सब्जेक्ट है, और उसमें सेल ऑफ गुड्स एक्ट है, करेक्ट?
सर
हाँ, तो वो सेल ऑफ टैक्स में आ जाएगा आपका। एक तो दो आ जाएगा, एक डिस्पैच का, क्योंकि दोनों को दोनों के साथ का बात रहता है, राइट। एक शॉपकीपर और जैसे कि
सर योर वॉइस इज
जो है
ब्रेकिंग।
पेमेंट इसी टाइम। नाउ इट इज ऑडिबल?
यस सर।
इज इट ऑडिबल नाउ? दे रहा है?
यस सर।
ओके। तो इसका एक ये नॉर्मल सेल्स आता है कि आपको इतना दिन में डिस्पैच करना है, आपको इतना दिन में पेमेंट है। सेल एंड अप्रूवल अलग चीज है, जहाँ पे अप्रूवल का विंडो पीरियड दिया जाता है कस्टमर को चेक करने के लिए। अगर वो नहीं है और डिस्पैच इतना, एक ये है कि उसके पास डिस्पैच इतना दिनों में पहुंचना चाहिए, फर्स्ट थिंग। सेकंड इज, उसके बाद उसने जो कंप्लेन से उसके बाद रेज करेगा, जो भी रेज करेगा, उसका रेज करने के लिए एक विंडो पीरियड भी रहता है। पेमेंट टर्म अलग है। आई थिंक इज नाउ क्लियर?
यस सर।
So that is coming under Sale of Goods Act. So that is separate and this one is separate. Okay. So wherever it
ओके
is a
सर।
sale and approval basis, वो आपको लिखा दिया जाएगा कि जिसे सेल एंड अप्रूवल बेसिस, राइट, या ऐसा इंडिकेशन आएगा जिससे पता चलेगा कि सेल एंड अप्रूवल बेसिस है। ओके।
ओके सर।
So
थैंक यू।
that's why we'll be solving such problems to know that. Now my question is that what is asked to calculate here? The opening stock or the closing stock? What is being asked here to calculate? If you see this question, अगर हम ये प्रश्न को ध्यान से देखते हैं, तो यस नैना, तो क्या कैलकुलेट करने के लिए बोला गया? नैना, चैतन्य रेज्ड हैंड्स। यस नैना।
So here it is said to calculate the closing stock.
Here it is.
Closing stock, sir.
अच्छा, क्लोजिंग स्टॉक ओके नैना, वेरी गुड फॉर योर रिस्पांस। तो हमको यहाँ पे क्लोजिंग नैना ने तो बता दिया, कौन बताएगा? What we have to calculate, what is given and what you have to calculate. Reasons, yes, two participants. Satyam Dubey.
So opening stock.
ओपनिंग स्टॉक, वेरी गुड सत्यम, सही जवाब, बिल्कुल सही जवाब। ओपनिंग स्टॉक, क्योंकि हम हमारे पास वो इलस्ट्रेशन 9 का सेकंड को ध्यान से पढ़ेंगे। ड्यू टू अवॉइडेबल reasons, no stock taking could be possible till down came to 50,000. Master date given, if it is the closing date, normally you understand that the closing stock on that date. Stock or closing stock, you have to decide. Now, this closing year is 31st March. We don't have stock. What have to calculate? We have to calculate this. So, I think oh, क्या हुआ है? What is sales? Somebody so what happens is 31st March, you are preparing the account every year. That means 31st March is my closing year. But it was possible till 15th April. And on that day, came to 50,000. Now, what? Yes, Pani Sharma. Pari Sharma arrangements. Yes.
Sir, your voice is not clear.
Yes, Pari.
Hello?
Pari, I'm able to hear you.
Sir, your voice is not clear.
Yes, Pari. Is it clear now?
Yes, sir.
Clear, Pari? Now?
Yes, sir. Yes, sir.
Okay, thank you. So what happens is the sales and it includes this
Not clear. Your voice is
cash
not clear.
purchase also. Would like to ask tech support. Tech support voice is breaking. Moment. Am I audible to all of you? Is it clear? Yes, Satyam.
नो सर, कुछ नेटवर्क इशू है, आपकी आवाज सही नहीं आ रही है।
My this is not coming. Just a second. Now it's coming. Just a second. I would ask the tech support just. Yes. Audible? Okay. Now it's audible. Acha, it's not clear now also. Okay. So let us take a break 5 minutes. I will try it from some other internet location. Clear? Okay. Let me try some other internet location. So let's see why this internet is now not working. Because for me it is showing fine. Bandwidth is showing correct. Just 5 minutes we'll have a break and I will check it. Yeah. So what we can see here that the trader has prepared the accounts on 31st March, and it is till 15th April. There was no stock taking was possible, and on 15th April the stock value came to 50,000. What are the facts which are established between 31st March and this 15th April is sales was 41,000, including the cash sales of 10,000. Purchases was 5,034, including cash purchases 1990. Then there has been a sales return. Now, what happens is, suppose I will say that there is cash sales and there is not a non-cash credit sales. Credit purchases, cash purchase. But anyhow, the goods movement will be there because even though it is sales in cash or credit, you are having the goods movement. So the information is given to us, maybe on the later part of the question, it will be helpful for us or not. So we have to see after on the basis of this information. Now, sales return is 1,000. That means the goods which are not found to be satisfactory for the customer. It is not a sale on approval basis. Normal sales return it is. You have sent the goods, customer took the goods. Out of the goods, normally this happens in every transaction, whatever goods you give. That's why in your trading account, if you have studied the trading account preparation, sales is with less sales return, and on the credit side and on the debit side, purchases less purchase return. So what happens is normally in every sale purchase transaction, there will be return transactions. So here there is a small amount of sales return, it is 1,000. Now, if you clearly observe the fourth point, this is up to 3 point, everything is fine. On the fourth point, what we see is sale value of 10,000 were sent on a sale or return basis to a customer, and the period of approval was 4 weeks. 4 weeks means just consider it as a 1 month, that means 15th March to 15th April. And out of that, he returned 40% of the goods on 10th April. That means on the 10th April, he returned 40% means he retained the rest 60%, took it for a sale, was satisfied with the product, but 40% he returned it. Now, this doesn't come under sales return because this is a goods on the sale or approval basis. So the treatment is different from the sales return. Now, what happens when it approved the rest? The customer was billed on 16th April. Okay. Now, when the customer is billed on 16th April means it is billed on the basis of those goods which are deemed to be recognized as sales. The fifth point talks about the consignment sales. So I discussed the concept of sale and approval basis, and I discussed the concept of consignment sales. So if you see the fifth point, it is talking about the consignment sales. What it's saying is the trader has also received the goods which is costing 8,000 in March for sale on the consignment basis. And out of that 8,000 goods which have been received for consignment basis, 20% has been sold by 31st March and 50% by 15th April. But these sales are not included in the above sales. That means this sales has not been taken in the sales of the goods. As I told you, why were they not taken? I have asked, given you that concept of consignment sales. Now, what happens is out of this sale on consignment basis, it is given at cost, of course, 8,000. 20% were sold at 31st March and 50% by 15th April. That means out of these 100% goods, 50 plus 20, 70 has been sold. So rest 30% is remaining. And goods are sold by the trader at a profit of 20% on sales. Now that means we have got the information on the profit margin also. You are required to ascertain the value of inventory as on 31st March 2022. Now 15th April value is given. You have to calculate on 31st March means you have to think of the opening stock and what all things we have to add on the opening stock and what all things we have to deduct in the opening stock and how to calculate it. Let us see. What is happening is 31st March is our date of closing, but we got the inventory on 15th April 2022. In between, there has been sales of 41,000 and there has been a sales return of 1,000. Apart from that, we have the inventory value 50,000. We have known that 15th April is the cost of inventory. Then on 15th March, we have some 10,000 of selling price of goods which are sent for sale and approval. And on 10th April, out of that 40% of sale and approval has been returned. 40% has been returned. After that, subsequently, the billing has been done on 16th April. So this is the total transactions flow which we have in our mind. This is what the question has given us. But then we have to find the value of the inventory as on 31st March based on these informations. So once we visualize this type of scenario, then we will be able to calculate our inventory. First, let us when we go, let us after sales return, let's take each of these points on sales and approval and consignment basis. Let us take the sale and consignment basis sales first of all. Okay, so 80,000 is in March per sale. 20% has been sold and another 50% by 15th April. These sales are not included in above sales. Now here the consign is this person. Given in the question, we are taking the inventory. Consigner has given that, and this person is the consignee whose duty is to sell it to a customer and get some commission from the consigner. 8,000 is valued at cost. So we have been given the cost. Only thing is, out of that portion, you have to think how much is unsold stock. The 20%, as I said, 30 is been remaining. So how we are getting this 30? Now goods are costing 80,000. 20% is sold on 31st March 2022. 50% is sold on 15th April 2022. And this 100 minus 50 plus 20, you are getting 30. So this 30 is remaining. Now this, out of this 100, when this 50, 20 gone and this 30 is remaining, so your goods cost is that unsold value. This goods cost is that unsold value, which is 30% of 8,000. So 2,400 is the amount of goods which are unsold as a consignment sale and which is there in you in the inventory. Okay, so those sales are not included, of course. But when they are not included as sales, that means there is no double calculation. That means in the sales value, those goods are not included. So from the sales deducted, but what is remaining is the inventory which is remaining. In that, there is addition of inventory is 30% of 8,000, 2,400. Now here, if you have any doubt, you can ask me. Then we can proceed further. Okay. Then come to the sale or approval basis. What happens is goods sales value is 10,000 and there was a 4-week period given. 4-week period started from 15th March till 10th April and 16th April. 15th March sale value was 10,000, 40% were returned, and 16th April there was the billing for the remaining goods. Now 40% in the April stock and 60% is billed in April, 16th April. So total is 100% is the March is the stock value of 10,000 is 100%. Out of that 100%, your 40% came to this April stock and 60% was billed. Now what happens is in this March stock, already this 40% will be there in the March stock. So what we have to find out is, it's already there. We have to find out that yes, 40% will be there. To find out this 60% which is billed, we have to find this value at cost. We have to find this value at cost for adjustment to the inventory. So your build is total 100 minus return 40 is 60. And the sales value is 60% of 10,000 is 6,000. Now this is the value of the sale value of the goods which has been gone. And from that, we have to find the cost of the goods. I think up to now it's clear to all of you. So profit is 20%. Cost equal to sales minus profit. 100 minus 20 is 80. And cost value is 80% of 6,000 is 4,800. Now in this sale and approval, you can get that the cost of the goods which have been given to the customer is 4,800. So I think it is clear up to now. Now what happens? Let us see how the things are going on. Value of stock is given on April 2022. We already calculated is 50,000. To that, we added the cost of sales during the period 31st March to 15th April. Now, cost of sales means, first of all, you get the sale of 41,000 minus this 1,000 is the sales return. So you get 40,000. Less you deduct the gross profit for 20% of 40,000, which you get 8,000. So when we deduct from the sales the gross profit, we get the cost of sales during that period. Now, this cost of sales is added to the opening stock. As I said that if you remember that formula which I have given you, opening stock is given. You have given this, this is the closing stock is given to you. You have to find the opening stock. So the closing stock, you are adding the cost of goods sold. So now you have added to the closing stock the cost of goods sold. And with that, you are also sending the cost of goods which are sent on approval basis. Now these goods, 80% of 6,000, that is 4,800, these goods are deemed to be sales. So when it's deemed to be sales, you have to add their cost also. So this is also added to the 4,800 and you are getting 86,800 because these goods are sent on approval basis, but sales has been recognized. So now we have to check that inventory and we have to add it up. Like cost of goods sold, same treatment, we make it. Less what happens is, we have to less is the purchases which have been done during the period of 31st March 2022 to 15th April 5034. And we have to also add, because this is not our inventory, unsold stock of goods. Now, those other goods which were sold were not included in this sales, but those which are unsold, they are 2,400. You add it back and you get the figure as 7434. From 86,800, when you deduct 7434, you get 79366. So this is how the typical foundation exam questions can be. And you can, if you know the concept of sale and approval, consignment sales, the equation, how to come to arrive at opening stock from closing stock, then you can definitely attempt all these type of questions. If there is any doubt, you can tell me, then we can proceed forward. Yes, Chaitanya. Yes, Chaitanya, tell me.
Sir, what if GST is given on the sale?
What if? Yeah, Chaitanya is not audible. Inventory taking, this is another problem where inventory taking for the year ended 31st March was completed by 10th April. And you have to find the value of the inventory again for the year ended 31st March 2022 when you have been given the inventory on 10th April. Now, if you can see here, this is the 10th illustration where it is showing a complete detail of the questions, and it is asking you to compute the value of inventory for the final account for the year ended 31st March 2022. Now, my question is to the class is, now inventory taking has been completed by 10th April. Okay. So what is the value of that inventory? And if it is completed by 10th April, then what we have to calculate? We have to calculate the opening stock or the closing stock. So seeing this question, what we feel, what we have to calculate, whether we have to calculate the opening stock or closing stock. Yes, Satyam.
Opening stock, sir.
Yeah, very good. Opening stock. So see, the moment we see the question, when you know opening stock, then immediately run that equation at the back of your mind, which has been given to you. Once you read it thoroughly, practice it thoroughly, yes, this opening stock means this equation will come into picture. So that is the way we should deal with these type of problems. Now, what we see is 31st March, 10th April, inventory figure is 16,75,000. And you have to find the inventory for inclusion in final accounts for the year ended 31st March 2022. For that, you have to find the inventory. Now, what we do here is profit margin is given 33%, 0.33% on cost. Now, this is the profit. Now, what is sales? Sales equal to cost price plus profit. Say, when it is percentage, cost price as the base is 100 plus 33.33 equal to 133.33. Now, your sales is 133.33. So, your profit margin is, which is on the sales profit, which is 33.33 divided by sales, which is 133.33. So, this comes to 25%. So, when your cost, anytime in exam also, if the cost profit is given 33.33% on cost, means remember immediately the profit margin is, which is actually on the sales, 25%. So, if you get this type of question, then immediately understand that the profit margin is on the sales, which is 25. If it is 33 on cost, means 25% on sales. Here what happens after the end of the accounting year until date of completion of inventory taking, sales were made for year 68,750. Profit margin is 33%, 3% cost. Now, what happens is when you are knowing the sales and you know the profit margin, you can calculate the cost of goods sold. Now, sales is 68,750 minus the profit margin you got 25% into 68,750, you get 51,560. This is the cost of goods sold, because this is one of the important figure which you should remember for taking your inventory checking. Now, once we get this, what is the purchases? Why we need to know the purchases? Because their purchases are given cost minus trade discount. Cost is given 90,000 minus the trade discount is 10%. So 10% of 90,000, it is 81,000. So you got the cost of goods sold 51,560 and you got the purchases as 81,000. Now, once we got these two figures, now what we have to see here is, one question was there during this period, goods were added to inventory at the markup price of 3,000 in respect of sales returns. Now, sales return happened, but the price of this markup price is given 3,000, which we require at cost. That figure is not given. And we are not concerned now about the slow moving. We are finding out about the sales return. Now, what happens is, markup price is that price where the profit is embedded into the sales. It is 3,000. So cost of sales return we have to find out actually 3,000 minus, because we know the profit margin 25%, and 2250. This is the cost of sales return. Now, why this concept? I told you in this diagram, sales return, purchase return. So this concept can be useful while calculating the cost of sales return. And now we can know where to keep it in the inventory. So what happened is we got the cost of sales return now. Then we are now concentrating on slow moving items. After inventory taking, it was found that there were certain very old slow moving items costing 11,250, which should be taken at 5,250 to ensure disposal to an interested customer. Then there is another heavy flood. We are not interested in that heavy flood item now. Right now, we are focusing on that event of slow moving items. Now, if you see here, slow moving items, which is costing 11,250, it should be taken at 5,250 to ensure disposal to an interested customer. What happens? Since it is slow moving and the company needs to dispose it, and nobody is in the market to purchase it, once they get a customer at certain value price at 5,250, like a salvage value, okay, we need to dispose it, and they wanted to dispose it. So at that point of time, what you have to do is, we have to do inventory write down, whatever inventory value which you have thought of. Now you have to make the adjustment to that, and it should be deducted now. Write down will be happening. So there is a loss on the revaluation of slow moving inventories. So 11,250 minus 520. 11,250 is that item which is costing. 5,250 is that customer which is ready to take at that price, and you have a loss of 6,000. Now this loss of 6,000 also has to be taken for adjustment in the inventory calculation. Then what happens here? Now we go to the another point, last point, where there is a we are not interested in the other lines. We are interested in this line, that there is a heavy flood, and which were 15,500 goods which are costing were received from the supplier beyond the delivery date. Now you are a trading concern, you take it from a supplier and you sell it to a customer, but the customer refused to take delivery, and in that case you value that inventory. Now you got it from supplier, customer, you are ready to sell it to customer. Customer is not ready to take it, willing to take it. At that time, we calculated the net realizable value of goods, and that was estimated as 12,500 as on 31st March. So when we found that a 15,500 goods is now the realizable NRV is 12,500, then we have to think of like cost or NRV, whichever is lower. Now NRV becoming lower, we have to find how much our value has reduced. So reduction in value on account of default. Your write down is happening. 15,500 from the goods which is costing actually, and 12,500 is that goods where the customer has decided not to take a delivery. So you got an NRV value is this much. We are trying to sell it because the customer is not willing, and you got 3,000. So after this, what happens is you now value the inventory as on 10th April. So what we are getting, you have got the closing inventory 16,75,000. Because this is closing inventory, you are trying to go to opening inventory, so you add the cost of goods sold. Cost of goods sold, we got 68,750 minus 17,190, 51,560. Then, because you are going to opening inventory, since you are going from closing to opening inventory, you subtract the purchases, 81,000. As I discussed, sales returns should be again subtracted because it is assumed that the sales has been made. So whatever sales return, you are subtracting that 2250. Then what happens? There is a loss on the revaluation of the slow moving inventories, which has happened. The loss is deducted because of the slow moving 6,000. Then customer is ready to take at a not ready, so you are valuing it at NRV. You are getting 3,000, and we get with all this the value of inventory as of 31st March is 16,34,310. So this is the value of the inventory. So in this problem, if you have any questions here in this problem, you can ask me. Aman Gupta, yes.
Sir, how profit margin became 25% from 33.3%?
25%, right?
Yes, sir. Yeah, right.
Okay. You can understand in English, I think, Aman.
Yes, sir, I can. Or if you're comfortable, you can continue in Hindi too.
Yeah, I'm comfortable in both.
Yeah.
I wanted to know if, since it's a specific question from the student, I wanted to know how which language the student is comfortable with dialect.
I'm
Now
comfortable
you
in
see
both.
here. Okay, so I can continue in English then. Okay.
Okay, okay.
So you can see here that the profit is 33.3% on cost. It is given, right? But
Right.
we have to, for all these calculations, we need the profit on the sales, because all the sales value, mostly in inventory taking, sales values are always given. So to find the cost, okay, you need the profit margin, correct?
Yeah.
If you see that adjusted selling price method, there also I have said that to get the cost, you need the profit margin, which is the profit on sales.
Yeah.
Normally these questions they ask like they give a profit margin, and when they given cost, they want the student to calculate it on the profit on the sales. It's given in the cost, they want the student to calculate it on the sales. So what happens is it is 33.33% on cost. So what happens? Your sales is actually cost price plus profit. Now since it is percentage and it is on cost, means out of 33.3, out of 100 means 100 is the cost price. Am I correct?
Yeah. Yes, sir.
So plus I added 33.33, I got 133.33. Now this is my selling price. Now what I have to do is I have to find the profit margin. So this profit, which is 33.33, divide it by 133.33. That means if this is the percentage on cost, I get this much on sales. So it becomes 25% on sales.
So why would we divide profit by sales?
Yeah, because that is the profit margin. When you are talking of margin, whenever a company talks of margin, it talks on the margin and the profit only, on the sales only. Because I sell goods to customers, right? And
Right.
whatever I get the profit, I want to know from the sales how much profit I'm getting. So that's why we talk on the basis of profit margin is always talk on the basis of sales only. Because then only company can think what to do next. If my sales, suppose I have two products, one sales profit is 50%, another sales profit is 10%. Then I have to think that no, I should not go with product B, I should go with product A. So because from how much of my sales I am getting profit is important, because that way I am controlling my expenses or not.
Sir, I'm confused. Like, if profit is given as 33.3%, then why are we calculating profit margin?
It is given on cost, right? It is
Yeah,
given
right.
on, but you are calculating the profit margin, it is on sales, because when you calculate this on sales, you could solve these things.
Sir, won't we deduct only 33%? Why? Like confused. Why are we deducting
Now you tell me,
25%?
Aman, now you tell me,
Yeah,
how do you find here the cost of goods sold by taking 33.33% on cost? When you have a
sir.
short time, solve this problem and get to the next problem in the CA Foundation
Yeah,
exam.
yeah.
How
Sir,
to solve this?
sir, I am just deducting 33.3% out of 68,750. I was just
Why?
doing like that. I was just
Why?
deducting the profit being mentioned here.
Why you doing like that? Is it mentioned that it is on sales? The profit is mentioned on cost. So how can we take 68,750 as cost when it is given as sales?
Sir, I got it right now. Yeah, I got it. I was
Okay.
just going with sales. I got it.
So today you got it, but at the time of exam you should get it. I'll be happy then.
That's why I asked, sir.
And because at the exam time, if we get confused, slightest mistake means,
I was just reading it as sales. That's where I got
yeah.
confused.
Okay.
Okay, sir. Thank you.
Okay. Thank you, Aman. So we now we got it. So this type of problems, please take carefully attention and always solve it because practice it also. Because as I was seeing you see foundation papers, this type of problems has been commonly asked. Let us take a 10 minutes, 12:30. Let's take a 5 minutes break. I'll again come back. Akshit has raised hands. Yes, Akshit.
Hello, sir. You were not there. I was asking doubt.
Yeah, tell me, Akshit. I was gone on a break actually, 5 minutes break. Tell me.
Sir, what is meant by inventory?
Is this your first class, Akshit? Akshit, is this your first class?
Yes, sir.
Okay. What I will suggest is please go through the slides. Okay, and once you go through again, don't worry, this class is again scheduled on Wednesday. That time I will clear your doubt on inventory. I think by reading that, whatever slides have been shared, you'll be getting a pretty good idea what is inventory. Okay. So still then, if you have doubt, we will clarify. Okay. Now we will be seeing the practical questions. All this, there are some practical questions in the study material we'll be solving. Then we'll go into the CA foundation questions after this. Now here, this question is given. I'm not telling here anything. Just can you tell me what you are going to find? It is the opening stock or the closing stock? So I would ask the class, what will you find out here? When you are asked to ascertain the value of physical stock as on 31st March 2022, what we are trying to find? We're trying to find the opening stock or the closing stock. Sonam, yes. Tell me, Sonam. Yes, Chaitanya. Because this is a very crucial thing whenever you're attending the question. First, you have to know that whether you have to
Sir,
calculate the.
opening
Yes,
stock is
Chaitanya.
given. Opening stock is given, and we have to find closing stock.
Opening stock is given. Where it is given, Chaitanya?
Sorry, sir. Closing stock is given. We have to find opening stock.
Yeah,
Fifty
closing
thousand.
stock is
Sir,
given. You
just
have to
you can
find
just
opening stock. So you
calculate.
see, while reading the question, you have to be very careful. Such type of questions when you come, first of all, in the rough notebooks, first you write what has to be calculated. Suppose say opening stock, then immediately write the formula which I've given to you, opening stock, whatever sir has told to be taken. Then you find out whether all these are there or not. So that's the way to solve the problems. And definitely you'll have less of errors if you do like that. Error committing chances of errors will be very less if we go in that method. So what is finding is 31st March 2022, the stock, but actually it was taken only on 9th April 2022. And this was worth 2,50,000. This is worth 2,50,000. You have to ascertain the value of physical stock on 31st March. And the value of the 9th April 2022 stock can be taken as a closing stock of 2,50,000, from where we have to go to the opening stock. Now, there are some other points written, some events are written, some terms are written, some way of company recording its accounts is written. Let us analyze each of them one by one. Because last question, like we analyzed that cash sales and cash sales, cash purchases, that was not of much of implications were required. So let us see now that whether all these points have some implications, or while solving, whether these points we required to take into picture while calculating the inventory. If you see among all these points, first of all, while attempting such type of question, target the rate of gross profit. See what is given. Is it on cost or is it on sales? Sales means job done, nothing is required. But if it's in cost, immediately convert it into sales. So here you can see a rate of gross profit is given 33.13% on cost. So you immediately convert it into profit margin for sales, and you get 25% of the profit margin. So immediately when you see such type of question, first of all, convert it into on the profit margin on sales. Now what you find here, that sales are entered on the sales day book on the same day of dispatch and written inwards in the return book as and when goods are received back. First of all, let us understand this each of the sentence one by one. It is said that sales are entered in the sales day book on the same day of dispatch. The moment you are dispatching the goods, that time you are recording in the sales day book. So that means you can see here in the sales day book, you are recording the goods on the day of dispatch. That means as the goods went out of the factory premises, it is recorded as sales. The inventory has gone to customer like that. And return inwards. What are return inwards? Basically, mostly they are sales returns. Return inwards in the return books as and when goods are received back. That means for sales and sales return, it is the recording is done on the basis of goods. When the goods are dispatched, we are recording it as sales. When the goods are returned, we are recording as sales return. So based on the goods only, we are doing the entries. Coming back to the next sentence, purchases. Purchases are entered in the purchase day book once the invoices are received. Means in the purchase book, the invoice is once received, then it is recorded in the day book. So I would ask the class, what is the difference between the recording of the purchase day book and the sales day book in these two in this question? What is the prime difference you are finding? What is happening? Can anybody say in the class? You can give a thought and you can say also what is happening here. ये सेल्स डे बुक और परचेज डे बुक पर रिकॉर्डिंग का अंतर क्या है इस दोनों में जो क्वेश्चन लिखा गया है इसके हिसाब से सेल्स डे बुक और परचेज डे बुक में क्या अंतर है यस चैतन्य या
सर सेल्स बुक में जब भी रिकॉर्ड होगा तो जिस दिन सेल हुआ उसी दिन रिकॉर्ड होगा और परचेस बुक में जब रिकॉर्ड होगा जब रियल में इनवॉइसेस आ जाएंगी
ओके वेरी गुड चैतन्य वेरी गुड नाइस फंटास्टिक आंसर तो हम इफ यू सी हियर हमारे यहाँ पे कि परचेस में बिल्स के बेसिस में रिकॉर्डिंग होता है राइट सो वेन एवर द परचेस इज ऑन द बेसिस ऑफ बिल्स यहाँ पे क्या होता है कि आपका गुड्स आए ना आए आप बिल्स के बेसिस में recording करते हैं purchase day book. Whether you have received the goods or not, you record the purchase day book on the basis of invoice. But for the sales day book, you record it on the basis of goods. Sales day book, you record it on the basis of goods. So this is the difference. Now, why this difference? Whether this difference will come to us in handy or not, ये आपका ये जो हम लोग एनालिसिस के इस बात को ये हमारे उपयोग में आएगा कि नहीं प्रॉब्लम में लेट अस सी फर्दर हम लोग जब दूसरे पॉइंट्स का एनालाइज करेंगे It was found that the sales between 31st March and 9th April, that is the closing stock period, as per the sales day book are 17,200. Purchases between 31st March 2022 and 9th April 2022, as per purchase day books, is 1,200. Out of these, goods amount to 500 were not received until after the stock was taken. Were not received until after the stock was taken. Now let us analyze this. What is happening is we have to find the cost of sales during the period of 31st March 2022 to 9th April 2022. So sales minus profit. So sales is 17,200 minus your 25% is the profit on the sales. So you got the 17,200 figure and you get 12,900. So immediately when you have the sales with you, quickly you calculate the cost of sales because definitely you have to use the cost of sales in the inventory calculation. Okay. So you have to add it back. So definitely you first of all find the cost of sales. Now once it is done, you find the purchases during the period. Now why this purchase day book is doing? It is doing on the basis of invoice received. Now out of this invoice received, you found that 500 were the goods not received. So what happens is till the goods are received, that is the purchase. We cannot take a purchase on the basis of invoices. We are recording in just in the day book, but the final purchases for the trading account should go only on the basis of goods received. So what happens is 1200 minus 500. 1200 is given the purchase, 500 is given the not received, and you get 700. I think up to here there is no doubt. So now we understand why that analysis was required about the purchase and sales. That has came now. This came handy in this. This became useful here in this question, right? Now what we see is goods which are invoiced during the month of March but received only on 4th April amounted to 1,000, and the rate of gross profit is given, which is not required. We have already calculated it. So invoice in March, get in a day book for the purchase. 4th April, you receive the goods, and then you have your stock taken. Now that value amounted to 1,000. So from the day book, you have to take out this goods value because this has been received on 4th April. So you cannot take in 31st March because 31st March you had an invoice, but you received the goods on 4th April. In that case, what you have to do? For the March, you have to deduct that 1,000. So in this way, if you go to the, once we got this calculation, what you do is value of stock as of 9th April is closing stock, 2,50,000. Then we have to find the cost of sales. The sales which is made between 31st March and 9th April is 17,200, less the gross profit is 25% on sales, 4,300. So you got 12,900. So this is your cost of goods sold. This calculation what we have done earlier, this is working. Then what happened is the purchases which are received during the intervening period. What happened? 1,200 we had taken, less which is goods received up to 9th April. We didn't receive any goods of 500. So 1,200 minus 500, you got 700. Less the purchases which is during March, but you received on 4th April. So that was the invoice less receipt. And this is the March which is not received. It is 1,000. So when you deduct it, you get the value of physical stock opening. So in that, the prime thing what you're doing in this is you have got the closing stock, you're adding the cost of goods sold, and you're deducting the purchases actually. But apart from that, these are the other reconciliations we're using based on the goods received or not. Okay, so this is how this question has been solved. Now, based on this question, if you have any doubt, you may ask me, then we can move further. Okay, I hope it is clear. It's clear to all of you, and you could have understood. So you can see here how the flow of questions are. Particularly in such type of questions, remember two things. First is whether you have to find opening stock or closing stock, number one. Number two, find the gross profit margin. Half of things is done. Now, once you find the gross profit margin, now you can think of what should be the cost of goods sold, what should be the purchases. Apart from that, think of the consignment sales, how this is to be treated. Sales and approval, how it is to be treated. Sales return, how it is to be treated. Purchase return, how it is to be treated. Then any goods received or not. Okay, there's other things which have been information which will be helpful for you. Analyze this information, and then you find the value of physical stock. So definitely with this approach, you can solve the questions. Let us now go to another question. Now, my question to class is what you want here, closing stock or opening stock? Yes, Saman Gupta.
Sir, we want closing stock here as value of stock or opening stock on 1st of April 2021 is being mentioned here.
Yes, very good, Aman. Very good. Nice answer. So, value of stock as on 1/4/2021 is given 7 lakhs. Now you have to find out the on the top, the information is given from the following information. Ascertain the value of stock as on 31st March 2022. That means you have been given a stock on fund for 2021 and you have to find in 2022. Means you have to go to the future date where it means you have the opening stock, you have to calculate the closing stock. In this question, what you can see is there is a profit which is given 25% on cost. Now, when it is given on cost, calculate it on sales. You'll get the profit margin. Next, what is given? Purchases during the period is given 1/4/2021 to 31st March 2022. It is given 34,60,000. So these purchases will be again added to your manufacturing expenses during the above period, which is the manufacturing expenses during the above period 7 lakhs. So for that, you you can now put the purchases to be taken in the additions for the opening stock to get the closing stock. Sales during the same period is given 52 lakhs 20,000. So everything is fine here in this fourth question, but then you have another thing written here. At the time of valuing the stock, a sum of 60,000 was written off a particular item which was originally purchased for 2 lakhs. Now, when the stock was valued, the stock was valued on 31st March 2021. And in that, 60,000 was written off for an item which was originally purchased for 22 lakhs. Now, from the 2 lakhs, 60,000 was written off, and you got the value of stock on 1/4/2021, 7 lakhs. Now, when the 60,000 was written off, definitely from 2 lakhs, 60,000 written off, what will be the value now? Can anybody say? If from 2 lakhs, 60,000 is written off, what will be the value? If you write down 60,000, what would be the value of the stock? So whether he is sold it at a profit or loss. The question is this stock, if you see the last sentence, that when he was valuing the stock, so that stock was sold at a profit or loss. Yes, Chaitanya.
Sir,
Yes, Chaitanya.
sir, 20,000 profit, sir.
How did you get 20,000 profit?
Sir, 60,000 already written off on 2 lakh, that is 1,40,000, and now it is sale on 1,60,000, hence 20,000 profit, sir.
Yeah. So what happened? Good Chaitanya. What happened? This stock is written off. Is written down to 60,000 means now this value has decreased, and when you're selling it, definitely you are selling it at a profit because you have sold it for a more amount after the value has decreased. When you originally purchased and you found that the value is not that much, you decrease its value. But the above transaction, the gross profit earned during the year means at that particular time when the gross profit was earned, it was 25% on cost. That means for normal sales, it was 25% on cost, but actually you here got an abnormal profit also. So if you see here it is 20 by 100 gross profit on normal sales into sales 52 lakh 20, you deducted 1,60,000 because that sales is not included in this sales, it has to be included separately. So you got the gross profit of 20,000 on this abnormal item. So this is added so that you get a total gross profit including the normal sales and the abnormal profit. So that way you get the total, and then you get 10,32,000. Now what happens is you get the value of stock 7 lakhs, you add purchases, add expenses, less the sales minus gross profit to give you cost of goods sold. So 52 lakh 20 minus 10 lakh 32, it will give you 41 lakh 88. So you get the value of stock as 6 lakh 72. So the basis of all this is first your calculation which you made here, and then you're moving around to finding this. So in that way you can find out, see when it is a opening stock and going towards closing stock, it had been like your normal trading account you do. So value of stock, you add the purchases, add the expense. You can prepare a trading account and also find out also. It's similar to preparing a trading account. You can add, then less cost of goods sold. You show the sales, deduct the gross profit, and you get the value of stock. So I hope it is clear on this class. On the next class schedule, we will go on more of this practical question and foundation papers. Almost all the foundation paper questions of inventory we will solve, and we will have a short question answer session also. So with that, I think you'll be able to clear the concept in inventory. Yes, Ashwika.
Sir, like I have this a small doubt, sir. There are like some questions like where we minus sales and add purchases, and sometimes we add sales and minus the purchases, sir. So like in which situation we should do this, sir? Like I'm getting confusion on that.
I have already told you if you have to first find out whether it is an opening stock or a closing stock, right?
Yes, sir.
So we will do more of the sums on Wednesday, so that will make you more clear on this, that what we have to do, whether you have to add purchase. I will be asking questions to all of you. You will be answering, and you'll be getting more clear that in this case I'll add the purchases or deduct purchases. In this case I'll add sales or deduct sales. Normally, what happens whenever there is a opening stock, purchases will always come in, and goods sold will always go out. Isn't it, Ashwika?
Yes, yes, sir. Yes, sir.
It's an opening stock, always purchases will come in and goods sold will go out to form a closing stock. If it is a closing stock, the reverse will happen. You don't take purchases because it is fresh. You move out purchases, you bring in the closing stock. You bring in the cost of goods sold. If it is a closing stock and you're going to opening stock, what you are doing is you are taking out the purchases and you are bringing in the cost of goods sold. That means that which has gone, we are bringing it back. That which has back, you are moving it out. Just reverse, you are moving. Correct?
Yes, sir. Yes, sir.
Okay. So we'll be doing more problems on this, and normally the confusion comes when it is opening stock calculation. But we'll solve it. Okay. Thank you, all of you. So we'll be discussing on Wednesday.